All right, let's dive into a world that you might think is all about fancy suits and skyscrapers.
Right.
But trust me, it's actually a lot more interesting and relatable than you might think.
Absolutely.
We're taking a deep dive today into investment sales.
That's right.
And we're going to be exploring everything from those massive real estate deals that you hear about to the high-stakes world of, startup funding and everything in between.
Yeah, we're going to uncover what really goes on
Yeah.
behind those headlines about billion-dollar acquisitions and
Yeah.
IPOs and all that stuff.
Exactly.
But more importantly, we're going to break it all down in a way that makes sense, even if you're not,
Right.
a Wall Street whiz.
Yeah. I always thought that investment sales was just about real estate,
Okay.
buying and selling property.
Uh-huh.
How do things like stocks and bonds fit into that picture?
So that's a great question.
Yeah.
At its core, investment sales is really just about matching buyers and sellers of assets to help them achieve their financial goals.
Okay.
And, that could be anything.
Right.
It could be a family looking to buy their first home.
Right.
It could be a company expanding their operations.
Yeah.
Or even a retiree
Right.
seeking steady income from bonds.
Okay, so it's not just about chasing profits.
Right.
There's some strategy involved.
It is absolutely about strategy. It's about understanding market trends. It's about evaluating risks and then making informed decisions that align with your long-term goals.
And I'm guessing there are experts who guide investors through this complex world.
There are definitely experts.
Yeah.
Think of it kind of like having a seasoned mountain guide when you're tackling a challenging climb.
Yeah.
These professionals, whether they're brokers or advisors or analysts, they bring their expertise and their connections to the table to help you navigate, sometimes treacherous investment landscape.
I'm starting to see how vast this world really is.
Yeah.
Can we break down the different types of investment sales?
Sure.
What are the main categories we're talking about?
So let's start with what's probably the most familiar one.
Okay.
Real estate investment sales.
Okay.
This is where you see the big players, like the high net worth individuals and institutions, and they're making moves with, office buildings, apartment complexes, even entire shopping malls.
So it's not just about flipping houses.
It's not just about flipping houses.
We're talking about serious real estate.
Yeah, we're talking about serious real estate. So imagine a scenario where maybe a pension fund wants to diversify its portfolio by investing in a commercial property in a rapidly growing city. They would work with a real estate broker who understands the local market, can assess the property's income potential, and can also negotiate a favorable deal. So it's really a long game, aiming for those steady returns over time.
Makes sense.
Yeah.
But what about those folks who are more interested in the stock market?
Okay.
Where do they fit in?
So that brings us to our next category, which is securities and financial investment sales. This is where we see things like stocks, bonds, mutual funds, exchange-traded funds, ETFs, all that stuff comes into play. And it's where brokers and financial advisors help both individuals and companies to buy and sell these financial instruments.
So this is where we see those crazy trading floors in movies.
Yeah,
with people yelling, buy, sell, with those flashing stock tickers in the background.
That's the Hollywood version. It's a very dramatized version, a very real part of this world, which is sales and trading. It is definitely a fast-paced environment where professionals are executing trades very rapidly, reacting to market fluctuations, news, all those things. But for most individual investors, it's really more about making strategic decisions that are based on their risk tolerance and their financial goals. For example, if you're concerned about rising interest rates, a financial advisor might suggest shifting some of your portfolio from stocks over to bonds to kind of mitigate some potential losses.
That makes sense.
Yeah.
So it sounds like it's all about staying ahead of the curve and making smart moves based on what's happening.
Exactly.
Okay, so we've got real estate. We've got the stock market. What else is there beyond those two?
So let's move into the corporate arena now. With mergers and acquisitions, often called M&A.
M&A.
And this is where companies buy or sell other companies.
Wow.
Sometimes entire divisions or subsidiaries of companies.
Right.
And it can be a way for businesses to expand into new markets, acquire valuable technology, or even streamline their operations.
I remember when eBay spun off PayPal.
Right.
That was a huge M&A deal, right?
It was a huge M&A deal.
Yeah.
That's a perfect example of a strategic divestiture.
Wow.
So eBay realized that PayPal was growing so rapidly that it made sense to let it operate as a separate entity, and they could both flourish that way.
Yeah.
And just like that example, these deals involve a lot of complex negotiations. Strategic planning, it's very complex.
Yeah.
And M&A advisors are the key players here.
Okay.
They're acting as negotiators and strategists to ensure a smooth transaction that benefits both the buyer and the seller.
Okay.
It's high-stakes corporate chess, basically.
Wow. Yeah, that sounds pretty intense.
It can be.
Okay.
Yeah.
So while M&A deals with those big established companies, there's also a whole world of investing in private companies, right?
Yeah.
The up-and-comers, the startup.
Exactly. You're talking about private equity
Okay.
and venture capital sales. And this is where things get really interesting, especially if you're into innovation and emerging technologies.
Right. Yeah.
Yeah.
I've always been a bit confused about the difference between private equity and venture capital.
Yeah, sure.
Can you clear that up for me?
So think of it this way. Private equity firms, they usually invest in established companies.
Okay.
That are looking to restructure or expand or maybe even go public.
Okay.
They're often looking to leverage debt to boost their returns.
Gotcha.
Which can be a risky but potentially very lucrative strategy.
Right.
Venture capitalists, on the other hand, they focus on those early stage, high growth potential startups.
Okay.
A lot of them are in tech or biotech, and they're the ones taking bets on the companies they believe could be the next Google or Tesla.
Oh, wow. So venture capitalists are the ones fueling all those disruptive companies we hear so much about.
It's right.
The ones that have the potential to change the world.
Exactly.
Wow.
And when these startups achieve significant growth, the venture capitalists might sell their stake, often for a massive profit.
Right.
It's high risk, high reward.
Wow.
With the potential for those unicorn success stories.
Okay, so we've got real estate, stocks and bonds, mergers and acquisitions, and then private equity and venture capital.
Exactly.
That's quite a range.
It's a lot to cover.
Yeah. It seems like there's an investment opportunity out there for everyone.
I think so.
Depending on how much risk they want to take.
Yeah, their appetite for risk.
Yeah, and what their financial goals are.
Exactly.
That's pretty cool.
That's the beauty of it.
Yeah, but before we get too excited about chasing those potential returns, let's take a closer look at how investment sales actually work.
Okay.
Let's go behind the scenes.
Let's do it.
And explore the step-by-step process that takes a deal from initial idea all the way to closing the transaction.
All right. Sounds good.
Okay, so we've got a sense of the different players in investment sales and the types of assets involved. But what does the actual process look like?
Yeah.
It can't just be a handshake and a pile of cash changing hands.
Definitely not.
Right.
There's a structured process, a series of steps that are really crucial to ensuring a successful and well-informed transaction.
Okay, walk me through it.
Okay.
Where does this journey begin?
It all starts with research.
Okay.
Thorough research and market analysis.
Okay.
Whether you're looking at a piece of real estate or you're considering investing in a company's stock, you need to understand those market dynamics.
Right.
The trends, the potential risks, and of course the opportunities.
So it's like doing your homework before making any big decision.
Exactly. You wouldn't buy a car without doing some research on its reliability, safety ratings, resale value, all that stuff.
Definitely not.
Right.
I'd be kicking myself later if I skipped that step.
Exactly. The same principle applies to investment sales.
Okay.
You really need to know what you're getting into.
Right.
So, for example, if you were interested in real estate, you'd analyze things like tenant demand, vacancy rates, future development plans in the area. For stocks, you would dig into the company's financial statements, earnings reports, industry outlook, things like that.
So due diligence is crucial.
It is absolutely crucial for making informed decisions.
Okay, so let's say we've done our research and we've identified a potential investment. What's next?
The next step is valuation and pricing.
Okay.
And this is where you determine the fair market value of the asset.
Okay.
Whether that's a property, a company, a block of shares.
I imagine they can get pretty complicated.
Man!
How do you put a price tag on something as complex as a business or a piece of prime real estate?
So it's both an art and a science.
Right.
There are various methods that are used. Depending on the type of asset,
Okay.
So in real estate, for example, you might look at comparable properties, or comps, as they're often called, to see what similar properties have recently sold for in the area.
So it's like checking Zillow or Redfin, but on a much larger scale.
You could say that.
Yeah.
But it's not just about looking at what's listed online.
Right.
Experienced real estate brokers have deep knowledge of the local market, and they can factor in nuances that might not be readily apparent online.
Right. Okay.
Now, for stocks, analysts often use metrics like the price-to-earnings ratio, or PE ratio.
Yeah, I've heard that term thrown around. I'm not quite sure what it means.
So the PE ratio essentially compares a company's stock price to its earnings per share. It gives investors a sense of how much they're paying for each dollar of profit the company generates. So a high PE ratio might suggest that investors are optimistic about the company's future growth prospects, while a low PE ratio could indicate undervaluation or concerns about the company's future earnings.
So it's a way to gauge the market's sentiment about a company's potential.
Exactly. And in more complex valuations, like for a large company or a private equity deal, analysts might build very detailed financial models, such as discounted cash flow or DCF models, to project future cash flows and determine a present value.
Well, there's a lot of number crunching involved.
There can definitely be a lot of number crunching.
Wow.
But the goal ultimately is to arrive at a price that both the buyer and seller believe is fair, reflecting the true value of the asset.
So we've done our research. We've figured out the value. How do buyers and sellers actually find each other in this vast investment landscape?
Good question.
Do they just bump into each other at a coffee shop?
Not quite. This is where marketing the investment comes in. It's all about reaching the right target audience. And generating interest.
There's like a targeted advertising campaign, but for investments.
You could say that. So the approaches will vary depending on the type of asset. Real estate brokers might use traditional methods like property brochures, online listings. They might even have open houses or private showings to attract potential buyers. For securities, it might involve issuing research reports, hosting investor presentations, or attending industry conferences to connect with institutional investors.
It seems like knowing where to find those interested buyers or sellers is a key part of the process.
It's a huge part of the process. And this is where the expertise and the networks of those brokers and advisors really shine. They know how to reach those who are most likely to be interested in a particular investment opportunity.
So let's say we have a buyer and a seller who are both interested. What happens next?
Now we get to the heart of the matter, negotiation and structuring the deal. And this is where things can get really interesting and sometimes a bit tense.
I can imagine there's a lot of back and forth.
There is.
Especially when there's so much money on the line.
There's a lot at stake.
Yeah.
So price is obviously a major factor in negotiations, but it's not the only one.
What else?
Other key elements might include contingencies, financing options, timelines for closing the deal, and even specific terms and conditions that need to be met.
Can you give me some examples of how those negotiations might play out?
So let's say you're negotiating the sale of a commercial property. The buyer might request certain repairs or upgrades to be completed before closing, or they might ask for a longer closing period to secure financing.
That makes sense.
In the world of securities, negotiations might revolve around the price per share, the number of shares being sold, or even the inclusion of certain clauses to protect both the buyer and the seller.
It sounds like each deal has its own unique set of challenges and complexities.
They do. And this is where experienced negotiators really earn their keep. Whether they're brokers or advisors or attorneys, they know how to navigate those complex discussions, find common ground, and structure a deal that works for everyone involved.
So let's say the main terms have been agreed upon. Is it a done deal at that point?
Not quite yet.
What else?
There's one more crucial step. Due diligence. This is where the buyer gets to really kick the tires, so to speak.
So it's like a final inspection before making it official.
Exactly. The buyer wants to verify all the information they've been given and make sure there are no hidden surprises or potential problems lurking beneath the surface.
Makes sense.
In real estate, this might involve reviewing lease agreements,
Okay.
conducting environmental assessments, or even hiring a structural engineer to inspect the property
Right.
for any hidden issues.
That makes sense. You wouldn't want to buy a property only to find out later
Right.
that it has foundation problems
Right.
or hidden environmental hazards.
Huge problems.
Right, yeah. But what about due diligence in other types of investment sales?
Yeah.
What might that look like?
Well, in securities, due diligence could involve, poring over a company's financial records,
Wow.
scrutinizing their contracts,
Right.
even interviewing key executives
No.
to get a better sense of the company's culture and leadership.
Yeah.
It's all about mitigating risk
Okay.
and ensuring that the investment is sound.
So due diligence is really a critical step to protect both the buyer and the seller
Right.
from unpleasant surprises down the road.
Absolutely.
Okay, so what happens
Well,
once the due diligence is complete?
Once due diligence is complete,
Are we finally at the finish line?
we're getting close.
Okay.
The final stage of the investment sales journey
Right.
is closing the transaction.
Okay.
This is where all the legal and administrative details are finalized, contracts are signed,
Right.
ownership is officially transferred,
Uh-huh.
and payments are made.
So it's the moment of truth
It is.
when all those negotiations and due diligence efforts
Yeah,
culminate in an actual deal.
that's right. And this closing process can vary quite a bit,
Okay.
depending on the type of investment.
Okay.
So in real estate, for example,
Yeah.
it typically involves the transfer of property deeds,
Okay.
title insurance,
Mhm.
and the exchange of funds through escrow accounts.
Okay.
But in the world of securities,
Right.
the closing might be completely electronic,
Wow.
with shares changing hands digitally through brokerage accounts.
It's amazing how technology has streamlined some of those processes.
It really has.
Yeah, we've covered a lot of ground today.
We have.
From the initial research and valuation
Right.
all the way to closing that deal.
Uh-huh.
But I have to ask,
Yeah.
why does this matter to the average person?
That's a great question.
I mean, most of us aren't buying skyscrapers or
Yeah.
negotiating billion-dollar mergers.
It's easy to think of investment sales
Right.
as something that only happens in,
Right.
the rarefied air of Wall Street,
Yeah.
but it actually impacts all of us in some pretty profound ways.
Okay, I'm intrigued. Break it down for me.
Yeah.
How does this seemingly distant world
Okay.
of high finance connect to Main Street?
So let's start with something we all care about.
Okay.
Economic growth.
Yeah.
Investment sales, particularly in areas like real estate
Uh-huh.
and business acquisitions, they inject capital into the economy.
Okay.
And that fuels job creation, innovation,
Yeah.
and overall expansion.
That makes sense.
So think about it. When a company raises capital through an IPO,
Okay.
or a private equity firm invests in a growing business,
Right.
that money is often used to hire more employees,
Okay.
expand operations, develop new products, or even acquire other companies.
Right.
It creates a ripple effect that really benefits the entire economy.
So it's not just about individual investors making money. It's about that broader impact on jobs, innovation,
Right.
economic vitality as a whole.
Exactly.
Okay.
And then let's not forget about wealth creation.
Okay.
Investment sales provide opportunities for individuals to grow their wealth over time,
Well-
whether it's through investing in the stock market, buying a rental property,
Right.
even participating in a crowdfunding campaign for a startup.
I've always thought of investing as something that's reserved for the wealthy,
Yeah,
but you're making it sound a lot more accessible.
it is.
Okay.
You don't need to be a millionaire to start investing.
Right.
There are tons of resources available today
Yeah.
to help individuals learn about different investment strategies
Right.
and find opportunities that align with their financial goals.
That's a good point.
And don't forget, one of the most common investments
Yeah.
for a lot of people is their own home,
Right.
which is a form of real estate investment.
That's true. I never really thought of homeownership in that context.
Yeah,
But it makes sense.
it does.
Okay, so we've got economic growth.
Yeah.
We've got wealth creation.
Uh-huh.
What else makes investment sales so important?
One crucial factor is market liquidity.
Okay.
Investment sales create a marketplace
Right.
where buyers and sellers can connect and transact very easily. It's like a well-oiled machine
Yeah.
that keeps money flowing through the economy.
Okay.
It enables businesses to raise capital,
Right.
individuals to buy and sell assets, and markets to just function efficiently.
Okay.
Without a robust investment sales ecosystem, markets would become stagnant
Right.
and economic growth would suffer.
So it's like the circulatory system of the financial world.
Exactly.
Keeping everything moving and functioning.
Yeah, it's a great analogy.
So understanding how this all works can empower us to make smarter financial decisions.
Absolutely.
Right.
Whether you're actively investing in the stock market or considering buying a rental property or even just thinking about your retirement planning.
Right.
Having that basic understanding of investment sales can really help you make more informed decisions.
Okay.
And potentially achieve your financial goals.
It's like having a roadmap to navigate that financial landscape.
It is.
This has been fascinating.
It has.
We've gone from those initial questions of what is investment sales,
right,
all the way to understanding its impact on the economy and our own personal finances.
That's right.
Yeah.
I think it's safe to say we've covered a lot of ground today.
Yeah, we really have.
But I want to leave our listeners with one final thought to ponder.
I love a thought-provoking question. Lay it on me.
Given all that we've discussed today, I think the key question is this. What type of investment opportunity aligns best with your own personal financial goals and risk tolerance?
That's a great question.
Yeah.
It's a question worth exploring
Absolutely.
as you continue your own financial journey.
Yeah.
Absolutely. And remember, there are countless resources available to help you on that journey.
Yeah.
Financial websites, books, podcasts like this one.
Yeah.
Even talking to a financial advisor can provide valuable guidance.
Yeah, great advice.
So don't be afraid to dive in.
That's right.
Do your research and explore all the possibilities.
Yeah.
Who knows?
Yeah.
You might just discover your next big investment opportunity.
You never know.
And until next time,
okay,
keep on learning and keep on diving deep.
All right.